This is Trade Flow News, bringing you relevant news and insights from around the world. Trade Flow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
OPEC on Tuesday stuck to its forecasts for robust global oil demand growth in 2022 and 2023, citing signs that major economies were faring better than expected despite headwinds such as surging inflation. Oil demand will increase by 3.1 million barrels per day, BPD, in 2022 and by 2.7 million barrels of oil per day in 2023, unchanged from last month, the OPEC said in a monthly report. Oil use has rebounded from the lows of the pandemic, although high prices and Chinese coronavirus outbreaks have trimmed 2022 projections. The downgrades, in OPEC's view, have delayed a recovery in oil use to above 2019 levels until 2023, it said last month.
If Europe is serious about ending all imports of Russian crude oil and refined fuels by early next year, the key to success lies in Asia, and more specifically China. The European Union agreed in May to end seaborne imports of Russian crude by the end of December and cut refined products 2 months later as part of efforts to punish Moscow for its February 24 invasion of Ukraine. The problem is that there is not enough diesel in the global system to make up for the potential shortfall in Europe, which has so far been unable to end its reliance on imports from Russia.
Moving on to the top news in the energy sector.
Germany said on Tuesday it would step up lending to energy firms at risk of being crushed by soaring gas prices, as the European Union readied proposals to help households and industry cope with an energy crisis sparked by Russia's invasion of Ukraine. The European Commission is due to announce on Wednesday proposals including targets to cut electricity consumption and a revenue cap for non-gas fueled plants. EU energy ministers will hold an emergency meeting on September 30 to try and agree on them. Separately, the EU's securities watchdog is also considering measures to help energy firms struggling to meet rocketing collateral demands after they were caught out by the surging prices as Russia cut gas supplies to Europe.
Brazilian President Jair Bolsonaro's move to sharply cut taxes on fuels, particularly gasoline, to boost his re-election chances has squeezed ethanol's profit margins and is expected to lead mills to shun the biofuel and focus strongly on sugar. Sugar and ethanol experts said that profits on sugarcane-based ethanol sales have fallen so low compared to those of sugar that Brazil mills, which have flexibility to make more of one or another, will shift as much as possible to sugar production as the harvest enters the second half. The risk for sugar producers worldwide is that prices for the sweetener could ease if Brazilian mills sharply cut ethanol production, boosting global sugar supplies. Next, we have the top news in metal markets. Dalian iron ore hit a 2-week high on Tuesday as trading resumed in top steel producer China after a 3-day holiday weekend, with supply concerns and signs of stronger demand supporting prices. The most traded January iron ore on China's Dalian Commodity Exchange ended daytime trade 2% higher at 728 yuan and 50 fen, $105.23, a ton, after touching its highest since August 29 at 732 yuan earlier in the session. On the Singapore Exchange, the steelmaking ingredients benchmark October contract rose 1.9% to $104.05 a ton, as of 0700 GMT, near Monday's 2-week peak of $104.55.
Industrial-scale mining for materials such as coal, gold, and iron ore is spurring tropical deforestation, with once impenetrable forest cleared for mines and access roads, new research shows. In the first study to quantify the impact of industrial mining on tropical forest loss, an international team of scientists found that just 4 countries are largely to blame: Brazil, Indonesia, Ghana and Suriname. Together, the 4 forest-rich nations accounted for roughly 80% of tropical deforestation caused by large-scale mining operations from 2000 to 2019, according to the study published on Monday in the journal Proceedings of the National Academy of Sciences.
We will now look at the top news in the agricultural sector.
France, the European Union's biggest grain grower, on Tuesday reduced its forecast for this year's drought-hit maize crop by 1 million ton to the lowest level since 1990. Grain maize production, excluding crop grown for seeds, was now expected at 11.33 million tons, 8% below the Farm Ministry's initial projection in August. A decline in planting, linked to the surge in fertilizer and gas prices, has been coupled with a sharp drop in yields caused by drought, the ministry said of maize in a crop report. The drop in yields had affected all growing regions and was particularly severe for non-irrigated crops, it added.
That is all for today's news on commodity markets. Stay tuned to Trade Flow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at Trade Flow News, which allows you to watch our program on your mobile device or desktop to receive information from there.